It's like you're playing the game of Monopoly in real life every single day. If you talk to my wife and my friends, they're like, can this guy shut up about real estate? Father was born in Uganda, Africa. He moved to America and learned via, being a refugee, the game of pizza making. She's like, I'll sell it to you, Asha. And my mom's like, we have to buy this. Who knows what the building's worth today? Probably in the millions. The guys you see that have scaled a portfolio to crazy levels use leveraging. They use the house's money to make money. We're kind of the final boss of the spectrum, right? A prosecutor that works for the state putting bad guys in jail that becomes a criminal defense attorney. That's kind of essentially where I have moved my career to. So one of 7 homes in the country is for sale in Florida. I would say just get up and go. In turn, learn how to slow down and enjoy the finish line.
So Anish, thank you for joining Capital and Coast. I would like to say welcome, or in Swahili, Jambo.
Jambo, yeah. Thank you for having me.
No, you're very welcome. You're very welcome. I want to start by the very beginning of
Sure.
your journey. And in 2010, at the bottom of the crash, your family bought 1429 Main Street for $435,000. Please correct me if I'm wrong. And the building Patalini, which I want to get into the name, which is super interesting. Sure. I understand you've created it was an Italian name from your surname. And it had been operating for almost 20 years. And what was it that changed that year and stopped you from paying rent to actually buying that actual floor?
So in our whole life, we grew up in the downtown of Sarasota, and we were running a small family owner and operated business. As another fellow East African, my father was born in Uganda, Africa. He moved to America and learned via, being a refugee, the game of pizza making. And we started our first store in Atlanta, Georgia. And then we eventually ended up in Sarasota, Florida. We liked it in Florida when we were very young. I think I was about 6, 7 years old. And we opened up the downtown Main Street location. That location is across the street. The original location is across the street from the current location it's at. And at that time, we had a lot of issues with our landlord. And I think this is what prompted us to do this at a bigger level today. And those issues, actually, if you look up articles in the Sarasota Herald Tribune where we live, there's local business owners get sued by a landlord over an AC unit and all this. And me and my older brother vividly remember the stress it caused on, a small business owner and my mom at the time and my dad. It was just crazy. And when I was in university, I went to the University of South Florida and I was going in a finance direction. And, like any other kid, you're like, I want to work on Wall Street and do some, cool stuff in funds and all that. And 2008 hit really hard. I was right in the middle of when I was in college. This market of Florida was hardest hit during that time. So there was really no jobs that were very appealing in the financial sector. Because everyone just got battered during that whole crisis, right? The whole global economy was very down. So at that time, my mother had called me and this lady who owned an art gallery across the street, which is very rare to get your hands on something like that, just because big developers and people with more money than us, and we didn't have money at the time, would likely be the first ones to buy it or outbid you. But luckily, she's like, yeah, I'll sell it to you. My mom's name's Asha. She's like, I'll sell it to you, Asha. And my mom's like, we have to buy this, But at that time, she was in her 50s and I was coming out of college and I was like, well, look, I could likely come home and do this and make more money than actually having a corporate job. Because at that time, the jobs that weren't paying as much. Obviously, I didn't know it was going to be a grind, but all we had to do was kind of revamp it and turn it into modern, more modern of what my age group would want it. And that's originally what we did. So we ended up getting, very lucky with that. We kind of borrowed money from family members and got a mortgage, did whatever we had to do, scrape the money together and purchase that building back then for that price. And if you live in the Gulf Coast, to be in a downtown and have a building for $400,000 is very unheard of. Who knows what the building's worth today, probably in the millions, but, we worked hard, we paid it down. And it's still, to this day, it's still operating. Now my uncle and my cousin run it. So, we always say, if you ever go into our restaurant, there's always a Patel making your pizza at all times. So
yeah.
Yeah.
And you probably
So
wouldn't
that
want to get rid of that as well, right? It's a legacy in your family.
absolutely, yeah. Yeah,
It's a
we want a
stake.
legacy award from the city because the turnover in restaurants is so high, but obviously when you own real estate in anything, any business, in tough times, you can really make it through because, you're paying your or if you pay it off or whatever, it really changes a lot for a small business owner operator when you own the real estate. One, if you ever get out of the business, you still own the real estate. And then two, mortgage payments are generally cheaper than rent. So it turned out to be something to where, longevity wise, we could keep going and keep it in the family as long as there's somebody to run it in the family. I have two young sons. If one of them want to take it over in the future, who knows? We'll keep it going as long as we can keep it going, you
Sure.
know?
Sure. And do you feel that it was they say this migrant mentality. You said your family came over as migrants. And do you feel that the support structure, the mentality, the grind, you see, you borrowed money from friends and family, right?
Sure.
A lot of
Yeah.
people
Yeah.
won't do that for their friends or family.
Right.
But
Yeah.
immigrants, you hear this story over and over again, right? They support each
Hmm.
other. They grind away. It wasn't easy. Don't get me wrong. Not all family and friends will do that, but majority of cases, it's kind of a story that always pops up in this sort of sector, right?
Yes.
Do you feel that that's driven you and instilled in you something which is a non-negotiable, insatiable drive to succeed coming to a new place?
Absolutely. Absolutely. So in our childhood, like, fun for us was going to somebody's, like, liquor store and stacking boxes of, like, bottles of, like, or my friends were in the motel business. So all the motels, they lived in it, and then we'd go jump in the swimming pool. Like, everything was in a business at all times. So you would pull up in the morning at your friend's house, and you'd wake up, and you just start helping making rooms. Or you'd go to your uncle's liquor store, you just go in the cooler and start, stocking the shelves. So, in that immigrant mentality, like, the kids, it's not like a chore. You're not growing up with the mentality of, like, go do these chores. It's just part of life. You have to go do it. It's part of your family business, and that's kinda why it's called a family business. And I think the biggest thing is it creates a great work ethic early on, right? So, you know, it essentially becomes work is non-negotiable, right? It's like what you make of it and how you approach the mentality of it. At the end of the day, everyone has to work to a certain degree to earn income to support the life that you want. Now, you can complain about it or you just go and do it. Just go if there with the right mentality and do it. So, yeah, I mean, was I thrilled to go do these things as a young kid? No. I mean, I hated going there, this and that, but now at my age, do I have an appreciation for it? Absolutely. I think seeing what that life is like for immigrant families and now small business is a very difficult game. The margins have shrunk, you know, finding employment's hard and finding the right people. But back then it was every day the mentality was, why pay someone else when we're already here? We'll just get it done and do it ourselves. And yeah, that mentality for sure helps you later in your life, you know, grind and treat work and the mentality of work differently. It makes it more enjoyable. And now you have something to compare it to.
It's
So
true. But Anish, do you feel like you missed part of your childhood? Like, is
not
there a part
really.
of you? No?
No, because actually, in fact, when minus my school friends and immigrant parents give their kids everything. So anything we wanted, my mom provided to me and my brother. Our friend circle we had was like we're friends at school, but then we had the Indian community of friends who are growing up identically to us. So we don't really know. We didn't realize that there's a different childhood lifestyle out there because all of our other kids are going through the same thing as us simultaneously. So it's not like you do realize it eventually when you're living in a town like in the town I live in, and you go to some kid's house for a birthday party. He's got Ferraris outside and lives in a mansion. You're like, whoa, this is on another level. But to us, it never felt like we were missing out because everyone else was going through the same thing at the same time.
I see. And coming back to Patlini's, I think 2 years before that, in 2008, you
Right.
opened a second one, right? And then it was
Yes.
a brief sprint until 2010. And what did those 2 years teach you about
So
scaling? Mostly at the wrong time, but scaling
yeah,
in general.
Over the years, that was because my parents had separated at the time, and my dad had one, and my mom had one. Um, and then actually, there was another time that we had eight at one time. This is like in the 1985 to 90. I wasn't born yet, and we had a bunch of them, and I remember like we had a document when we were cleaning out the attic of like a franchise agreement drafted by a lawyer from decades ago. So there was always a factor of, okay, let's try to scale this, or let's open multiple locations and multiple businesses. But I wanted to do that originally as well. And it becomes very difficult to find a good owner operator, or to give the right person some skin in the game and equity so they treat it like their own. It becomes very hard. So for us, and my mentality was, there's no point in expanding a business if the original business itself is not optimized to the full potential. Now, if there was that optimization of the original business where it's cranking at all hours a day and there's a line out the door and we need to take in more customers, then let's figure out a way to do it. And the hardest thing was just finding the right people to do it. The pizza and restaurant fast food business in general is a very difficult game. The hours are very long. The turnover is a lot. From a management standpoint, it's very stressful. And I was coming into an era where you were like setting up 20 interviews for kids to come work for you, and maybe one may show up to the interview. Like it got to that point where it
Wow.
was just like, in that fast food, it's a very minimum wage entry level job, right? So, and every now and then you get lucky. I have guys that have worked with us for 10, 15 years, a lot of them now. But I mean, over those years, if you were to ask us, and not only me, anybody in fast food and hospitality, how many, what's your employee turnover on? It's astronomical. So what ends up happening is it's like you get, discouraged to a certain degree, to where you're like, I might as well just do this myself. Like at that point, you keep hiring and going through this process, trying to find the right people. And then plus, because of the nature of what that business was, it was such a family oriented space, to where every customer and relationship was with me, my mother, my uncle, my cousin. And it became to this point where it's like, they want to come see us. It's like, like in England, when you go see Boss Man down the corner, or, you go to Costco, or you see this auntie there, whatever, you say hi. It's like this family environment, to where and we realize like quickly that's what it wanted. And that's kind of what it was built to in the beginning to be. So, we just kept chugging along with the one. And right in that same era is when we started getting into real estate too. So the mentality was, okay, well, we can continuously do this, but then now we can find another semi-passive vehicle to do also on top of this.
Yeah, no, I get it. Funny you used the word boss man. I do remember you saying that you've got family here in the UK,
Yeah, yeah.
and you see boss man in the shop. It's
That's right. That's right. Every time, yeah. And here, if you go to
yeah,
all the Asian restaurants and all the immigrant-owned businesses, that's who you see day in, day out.
yeah,
And we learned that, and it became like this thing where if I'm not there, for a few days, or someone in the family is not there, we kind of took a pride in that fact that one of our family members would always be there, and you kind of lose that quality and that experience when someone from the family is not there. When you go to like say a Chinese restaurant or a Thai restaurant, you see the owners. That feeling you get to see the owners is a different feeling.
it is.
So
It keeps
yeah,
everybody in
that's
check as well, like the staff members
absolutely
and things like that. They're not slacking. You're
yes,
overseeing it, and once they know you're involved in the business, they're not going to, mistreat the customers,
yeah. And
or try
plus,
to
we were
dip in.
doing everything by hand, right?
Mhm.
So at that point in time, it wasn't optimized to be like a very scalable fast food business, to where everything comes in prepackaged, pre-shipped, you're just warming it up and all that stuff. So there was a level of a lot of prep work and things involved to, all the dough is made fresh every single day. All this type of stuff. It still happens today, to where you could get that stuff shipped in, and you could not shred the cheese, and you could not cut the meats and all this stuff, and then open multiple locations with this huge other system, but you would sacrifice the quality. And so at that point, it was just, I think, leave it as it is, and keep it going as long as we can.
Yeah. And you've touched upon hospitality being a tough business, right? And this is something that
Yeah.
everybody says. And we're going to go
Yes.
into the business that you're involved in, and you do many different types of lending products, actually all sorts of lending products. And
Yeah.
so you've got the exposure in the market that most people don't have. Knowing that, what are the businesses that you would say at this time, or boomers are retiring from their mom and pop businesses or their larger businesses that they've scaled over the years? These are the sorts of businesses that we're going to be looking into, or these are the sorts of businesses that we see our clients more increasingly
Yeah.
looking into. What would they be?
I think the service businesses all around are, in my opinion, the best. It can be optimized by taking a boomer business, implementing AI processes, streamlining marketing campaigns that maybe they did not do, billing and all these type of things. Because the service trades, plumbing, electrical, these are things that I use every single day in my real estate portfolio. And pest control and lawn service and all that. It's grueling work, but it is one of those ones that almost to me are like a recession-proof business. They have ups and downs like anybody, but their highs and lows are not as dramatic as other sectors. And the boomers are going in there. That's why private equity is very heavy in that. They're coming in there saying, well, there's this plumbing business that's owned by this family. Let's leave it as it is or merge it with this other plumbing business. I have a friend, his name's Ravi Patel. He was in Fort Myers. He got into the laundromat business, coin laundry business, and now he's building them. He's had an amazing success with that to where it was a boomer operated business and a lot of people want their exit and retirement. And he's going in there, going from coin laundry to tap to pay
Yep.
on credit card and adding wash and fold. And we're seeing a lot of those. And I think those businesses are wonderful. It's not as labor intensive, but obviously there's no such thing as passive income in any of these businesses, but
Of course.
you do have to work for it. Those type of businesses are great. I would say that there are some franchise businesses that are still very good. I have, we see a lot of people that do very well with UPS stores, certain franchise models, Dunkin' Donuts is, or Jimmy John's or certain things like that. So we do see some food businesses that do well. But, then again, all of this is all contingent upon the operator and the location,
Sure. And
you know?
I just want to touch upon two things you brought up. And the first thing is the franchises. Very interesting. A lot of people shy away from them. I love them specifically because it's a proven model, right? That's why banks love
Yep,
them and it's easy to get financing for them. We'll
correct.
dig into that side as well. But in terms of the the top franchises that you would not even blink an eye to, if somebody came to you and said, Anish, I'm getting into these top franchises, what would they be? And why?
I mean, it's so cyclical, but down here, like all of the chicken tender type franchises in Florida have been like really big here. There's a
Right.
lot of like different sports bar franchises that have done really good. I know there's like, and there's a new one called Walk-Ons, and here there was one down here in Sarasota, that Twin Peaks and all that stuff. But then again, they're like, it's hard to predict which one's going to last longer than a decade. Like Buffalo Wild Wings was absolutely massive when I was growing up. That franchise has now shrunk in size, and their new concepts more modern, fresher things coming out. It is hard to figure out which one is there. For example, there was a massive frozen yogurt craze. Everyone had a frozen yogurt shop of different kinds. Now I think like only one that I can see around that lasted is like Menchie's is like the one that's here. So it's very hard to tell. With these things, you want to get in at a right time. The biggest thing and you probably already know this too in England as well, is my uncle that actually runs our family business now. He started in Subway in like Cardiff, Wales. So he was in England originally having the original Subways. But over the time, a lot of the operators at Subway, you could own a Subway and as the owner operator run it and live, make a good living. And over time, Subway franchise have just dwindled down more from the margin standpoint and every standpoint of just growth to now, if you want to be a successful Subway owner operator, you have to have multiple locations to make the
Oh,
same money that you would have made, 15, 20 years ago with a single location. So now then people dive into, is it even worth it to go down this path? So,
you
um,
brought up specifically UPS and a few other. I think it was F&B brands. But
Yeah,
let's touch
yeah,
upon the UPS, right? That's a
yeah,
service-based. Imagine that's it is a service-based business,
yes. Hmm.
and you said you've had personal experience with people coming
Sure.
through. I mean, tell me more about that.
Well, the beauty behind those UPS stores is, well, from what my experience of people that I know that operate it is the PO boxes. So you have like the shipping and all that side of it, but then you have the PO boxes that they literally rent as like if it was real estate inside the stores, and then they also have like notary and all this type of stuff. So they have multiple models, but mainly is we're in a shipping world. Everything revolves around Amazon and it revolves around packaging and it revolves around service to your house. So as retail dies and slows down, everything becomes a shipping world, and that's what we're seeing more and more often. And that's why, a lot of shopping malls around the country are closing down. Retail is going down. Um, and so I just think it's a safe bet to get into like those type of package ship stores or UPS type businesses because you have a couple of verticals there where you can make money, but that sector is just going to increase time after time again as just the internet and everything becomes so extremely automated, and it already is there. I mean, now I still go to the grocery store. I have friends that haven't gone to a grocery store in years. Everything comes to them. And you would think that if my generation split 50-50, the next generation, all they know is Uber Eats to your house. For them, if they get hungry, they just click a button on their phone. They don't get in the car and say, "Oh, I want to go grab a coffee. Let me go to Starbucks." The Starbucks comes to them. So at the end of the day, I think anything in those type of businesses are very good.
Yeah, and in terms of the people that you know running those businesses, I'm sticking on this one because you mentioned um, landscaping, HVAC, plumbing, all these
Yeah.
services businesses, right? So
Yeah, the
it's
skilled
across the
trades are
board.
great.
Yeah, the
Yeah,
skilled trades are great, and then these evergreen service businesses are
yeah,
evergreen.
yeah,
In terms of the UPS, what is the people that you know running them? Like, what are the margins that they're seeing from this? Is it the Amazon contracts that keep them going? The general B2B shipping? We've got the real estate inside there, like the PO boxes. I get that,
yeah,
and all the additional services you could kind of bolt on. But
yeah.
what are the margins good for these stores in terms of the rent they're paying and
Yeah,
the
I mean,
location?
they're also very location heavy based, right? So like an emerging market, like here out east, they're building, master plan communities. And in that, you can put a store in there where they're building X amount of homes and now everyone uses that same store. Margins wise, I'm not too familiar with how the margins are across all of their, different verticals that they have to make money. But I do know that their growth as UPS stores in general is astronomical. I like a decade ago, I would see maybe one. Now, almost like every other shopping center has one in it. So there has to be enough revenue to support that many stores and that much of a density, which means that their margins have to do good, and the franchisor has to make it good enough for the operator to have the juice has to be worth the squeeze for the operator at the end of the day. So I'm not familiar with exactly what the margins are, but I'm assuming that they do well enough to where they can support uh, one single operator and you can make a living off of one store.
Of course. And you offer a whole wide of lending products, right? So tell me more
Sure.
about that. Your lending
Yeah.
business, how you got into that. You could touch upon that as well. And then across the board, what type of products you offer? Because you're in the mortgage business, but you fund across the board,
Yes.
right?
Yeah. So after the restaurant business, we got into real estate and I started buying single family home rentals properties and small multifamily properties. So as a family, we have about 120 rental units across two different states. And we were, single family owner operators doing kind of management in house at the time. Now we have some outside management, and we were running just a small real estate business. Buy a property, fix it up, make it look nice, stick a tenant in there, and that was kind of the transition from the restaurant business to a real estate investor. So as we were growing that, I had an opportunity to get into the mortgage business by somebody that I met, from through a friend. And, he told me, he's like, you are well versed in the space of investment lending, or how to grow a portfolio. And have you ever thought about the mortgage business? And to me, banking sounds so boring to me. But when I was got into it and explained on how it works and said, well, hey, you're good at the investment side of things on how to analyze and pick apart the investment. How about you do that and pick apart the debt on it? Because the most successful guys ever, from my mentality was generationally, from like, say, my parents' mentality was you work hard, you save up money, you buy something, you pay it down in cash, you don't carry a mortgage. That's like successful. And then you go do it again. And then in my head, it's like, if I were to play it that way, how long would it actually take? I mean, it's astronomical amount of years. So the guys you see that have scaled a portfolio to crazy levels use leverage. They use the house's money to make money. So I kind of went into a deep dive in understanding that. And then years ago, I joined my partner, Anthony, who runs the office in New Jersey, and I run the office in Florida. And we are a group of a larger bank called American Financial Network, which is one of the largest mortgage banks in the country. And we have our own division, and that division is called Loanova. And Loanova, inside of it, does everything lending to do with your regular first-time home buyers. So that's kind of one box of what we do, which is anyone that has a FHA loan and you're a first-time home buyer, or you're a veteran, or you're looking for a regular conventional mortgage. All of that is kind of in that world where we partner with real estate agents, and we have a great team of expert loan officers across the country, and we put you in touch with them, and we have sales reps and all that. So that is our everyday kind of bread and butter business that we're very good at. We recruit the best talent in the country. We have the best processors and underwriters in the country. And so that is that. Then on another side of it is where most of my attention goes to, where is investment lending. So that is all your debt service coverage ratio products of like, okay, say someone doesn't have strong financials, but they have enough cash saved up to buy an 8-unit apartment building. Does it cash flow? Can I get leverage on it? Will the bank actually give me the money for it based on the assets, and do the assets deliver enough income to support the debt? And all those analytics that we do, I focus heavy on products like those for people who want to do fix and flip loans, to where people were like, I found this and I found a distressed property. I want to go in there. I want to flip it. We concentrate mainly on that. We do a little bit of commercial and business stuff, but mainly anything to do with residential space in general is where our focus is. That's where we outshine the competition the most, and that's what we're building every single day.
And in terms of the resi products, right?
Yeah.
Where are you seeing the most flow? Is it people buying multifamilies, stabilizing, and then refining out and doing it again after 12 to 18 months? Or is it individual fix and flips? I mean, where is the majority going? I mean, everyone's
I
got
would
their own.
say,
Yeah.
yeah, I would say value add still. If for our investors, that's their goal. Their goal is to go in there, purchase a property, value add it, get the numbers better, refi it out, try to get most of their money, if not all of their money back, rinse and repeat. And there's a lot of people in the world. If you talk to any person in real estate, it feels like when you're in this space, it feels like everyone's doing it, and everyone is doing it. I think there's a lot of deals still to go around, because the markets are shifting. There's different, like the Sun Belt cities are very hot here. So like the South is doing really well, Texas and all these people are migrating out of the Californias and the New Yorks coming down to the South, or people are making it to where there are places that are unaffordable. People that came out of college and they can't afford it to places that are more affordable. So markets are constantly shifting and moving. We do all 50 states, but I think people who are analyzing distressed properties, mismanaged properties, properties that are undervalued or can be increased in rent marginally, and they're going in there, value adding them, refining them out, trying to get as much as they can back out of those properties, and then going back. And we're a relationship business. So we understand each investor strategy. We have some guys that are saying, hey, we want to do this as our appreciation, or some guy might say, I don't even care about the points. I don't care the interest rate. I'm just doing this for tax liability. Or I have an investor who goes, I need this to work because I need the cash out of it to go do, project B from project A. So we kind of, meet with the investors, see what their angle is, what are they trying to achieve here, and then we cater those loan products specifically to that investor because there's a million different ways we can structure a loan, right? Some guys are rate conscious. To get a better rate, prepay could be longer. There's a guy who goes, you know what, remove the prepay because I might refi in 2 months. I don't want to add a prepay. Or there's a guy who's like, I need to be at this certain rate. I need to buy down points. Or, it all depends on how we want to structure it and how we want to deal with it. Kind of a la carte per person.
Sure. And you yourself, you've got what, 18 to $20 million worth of
Yeah.
property.
Yeah.
Um, how quickly did you scale to that?
It took a long time because the original way I did it was going in at it free and clear in the beginning. One, and also by the way, it sounds impressive, but it takes a stroke of luck as well, right? In any business. And that stroke of luck was that the appreciation in Florida became astronomical. These houses that I was buying for 80, 90, $100,000 appreciated almost double. So there was so much equity there. And what we ended up doing was taking line of credit against a package of portfolio of homes, and then taking that equity and then using that essentially and buying in cash, because what happens is to get the best deal, you have to go in cash. You have to move fast. Wholesalers want to, if a wholesaler has an off market deal and you can steal it, there are ways to get into hard money and there are ways to do it from an institutional level, like fix and flip loans. But generally speaking, I mean, cash is always king, right? Your offer is going to get accepted faster. You can move quicker. So we would use that to go in there and then we'd refi and exit out. So the beginning took a very long time. But then I would say we started 20 months ago. We started a company, me and my brother in Georgia. We identified a small town called Griffin, Georgia, south of the Atlanta airport. And like that, we scaled to 22 units in 18 months by buying an 8 unit that we leveraged from the start. We bought another 8 unit in cash that we're about to refi to get all of our money back on that, and then a batch of single family homes. And we built that entire cash flowing portfolio very rapidly. So now, as I've gotten older and now that I'm in the banking side of it, I understand how to harness these tools to, really attack and grow a portfolio. Because now the goal really is to add the units, and it depends. That area that we're buying there has very little appreciation. It's all cash flow, right? Down here in Florida, my margins are shrinking every single day because the taxes and the insurance keep going up. But my appreciation is also going up. So we're kind of playing the game from two different sides. So it also depends on where what market you're in.
And in terms of the what you did differently from the Georgia, right? So a lot of people are buying in the Midwest. They go for the multifamily units, the single family homes, the
Sure.
portfolios, the landlords who are exiting, or just the 1920s to 1930s
Yeah.
homes which they're adding value to, right? Or even
Yep.
reconstructing, totally, depending on the area, if it's up and coming, or they're just Section 8ing or HUD bashing them on the side,
Sure.
right? So what did you do? You said when you came to the banking side, you
Yeah.
knew what to do differently. It's like you
Yeah.
had these golden nuggets to say, I'm never doing X again. I'm going to continue doing Y and scaling through Y. And what is that Y? What did you learn when you came to the banking side, and how to leverage those products to your
I
favor?
I the thing is one, the strategy to identify it was a little bit different. So for us, we would look at it worst case scenarios because now you have debt service, right? So when you land it in cash, the cash goes there and you're analyzing it on a cap rate standpoint. And you're saying, okay, well, I'm going to buy something for $100,000. I'm going to rent it for $1,000 a month. It'll take me 100 months. It'll take me 10 years. In the financing side, when you're going that route and you're value adding, your cash on cash multiple becomes almost unlimited if you can pick it right. And you can value add it because you can get all your money out. The cash flow decreases compared to over here, but the scale becomes massive. And now instead of building equity that you already have 100% equity in one unit, you're doing it over a massive amount of units. And especially for guys our age, it makes sense because by the time I have a 2-year-old and a 1-year-old, by the time some of these notes have been paid down, imagine what it could be worth. And you're still cash flowing, but you're underwriting the deal based on the worst case scenario of that. For example, when we have investors that come into the door and say, "Hey, I want to take a loan. This is the numbers it does on Airbnb." We don't want our investors to lose. So we say, "Okay, that's great. Say it's not in a obviously if it's in a beach town, different story, or if it's in like by Disney World. But say if it's like in the Midwest and it does this great numbers on Airbnb, I would tell him, well, worst case scenario, if your municipality changed the laws on Airbnb in your town, what if you had to convert it back to a long-term rental? And on top of that long-term rental, say the market went down even further, can you still in that moment debt service?" And now we've figured out a way to get these deals leverage. We can use less cash up front, buy more, but still protect ourselves and mitigate risk to a certain extent by doing that. And if you play the game right, you can win a lot. But there's also no one has a crystal ball. Like there are towns that completely in America are going bust. That are ghost towns. It happens all the time. There's no one wants to live there, and then unfortunately for the young guys who are on limited cash, they go to the Midwest and these other markets because that's where they can get a bang for your buck. Not everyone can go to a multifamily for where they're buying $250,000 a unit. So a quadplex is $1 million. They're buying quadplexes for 50,000 a unit for 200 grand. So you got to go where you fit in. I think the government, like you said, the government subsidies and Section 8 and all that is huge. I have them. You know, I have them. They work great. I know people always say management intensive and turnover and all that stuff, but you have to look at it from any angle. That wouldn't matter where you go. It happens. So
It also comes
yeah,
down to your vetting process as well, right? If you've got a strict vetting
absolutely.
process and get the good tenants in and look at their history, most of the people that I've spoken to that do have multifamily units per Section 8, Hudbash is pretty straightforward. But it's the same thing. As long as you vet them, you're okay, and you've got a good maintenance and management team in place.
That's it. Yeah.
Across the board, you're stabilizing and bringing down your costs, and you get to know the processes as you do more of them.
100%. And people in this market, it's getting, I mean, it's America's becoming unaffordable in a lot of markets. It's very expensive. So you are having there are more people going from this middle gap of housing downwards, looking for something more in affordability than people going into the luxury space. So, if you can be a landlord that provides a good, clean, safe environment for your tenant, for me, one thing I do is I rarely increase rent because I don't like turnover. Some guys want to push the rent, push the rent, push the rent, and it cause a turnover thing. For me, if it's flowing, I rather have that flow and focus on the next deal than having like, okay, unless it's a big thing where like, your town's population doubles overnight and there's a big demand and I would have pushed the rents higher. Or I had to do it recently a couple of times due to the fact that insurance here because of hurricanes went up. So unfortunately, I had to text my tenants and say, "Hey, I have terrible news here, but like, I don't want to sell this place, and you're an amazing tenant. Full transparency. Here's the reasons why I'm doing that." You have to understand, like, from a if we were to go back to the restaurant business, those customers are paying your bills. Same with the tenant. You have to make the tenant happy. Although rent's due on the first, and sometimes tenants are headaches and all that stuff like that. Without them, especially if you have a mortgage payment or debt service, you want to provide those a great environment. And when you provide that great environment, you often get the best tenants. And those best tenants are happy with their landlord, and that relationship goes strong. Those tenants then never call you. They'll be there for you long term. They'll take care of your property better, and that's kind of what you want. You know,
Yeah, and you touched upon something really important, and I feel that this is becoming a crisis, especially in Florida. The insurance game,
yes,
right? The insurance
yeah,
isn't below the NOI line, right? It's an operating
yeah,
expense, so it comes straight out of the NOI. So if you're looking at like a 7 cap, every extra $1,000 a year of insurance destroys about 14,000 of the
yes.
building value. So in the last, like, what has the last 3 years of Florida done to the paper value of your own portfolio, and how do you see it affecting the deals of the people coming in? that you're financing at the same time?
Yeah, so sometimes it busts the deal completely. So we would get an insurance quote. I see it has gotten way better. So 2 ways. It has gotten way better from premiums across the board in Florida. It has kind of stabilized out. It's still more expensive than like other states, but it has gotten way better from where it was directly after Ian and Milton hurricanes. Now, with that being said, if you have to add additional flood insurance because you're in a flood zone X, is what they call it. And if you're in a flood zone or in one of the flood zones, if you're outside of the flood zones, that extra supplemental insurance, if you have a multifamily, kills the deal. But those old landlords that are in there usually can get in. That's if they're selling it at a certain way. But people are still trading hands with those properties all the time because some guy could come in there and say, I'll self insure. I'll take my chances. I'm not going to buy supplemental insurance and I'll take my chances by just buying it in cash because he needs a 1031 from a different state that has a different issue. So we're still seeing those deals being transacted just from a different light or a different like mentality. But you know, there are ways to combat the insurance. I think, our governor is doing a good job here. Now they're introducing, you know, property tax reform to save money on property taxes, and they're bringing on this and this different stuff. I don't know where it goes. For us, I've lived here my entire life. Those 2 hurricanes on my coastline within 60 miles from here was like insane. Like, that I have that storm hit 15 minutes from my office and all of my properties were here. Luckily, even though it was a direct hit, I had 1 roof leak and I had to pay like $20,000 for guys to go clean all the yards because that's how much tree damage I had. But I crossed my fingers. We generally got lucky. Some people lost it, some people on, and that's another problem that people are upset with because even if they do have the insurance on these properties or even in their primary home, for example, there is no guarantee that the insurance company even pays out the right amount. So that's why the insurance company is constantly getting sued. And that's why the public adjuster business has become such a big thing where you get a public adjuster to go fight them for you. So you are required to get the insurance, but then the insurance doesn't do their end of the bargain. So you have to get another guy to go fight them. And it happened to us when my mom's house after Ian. It took her 2 years to get money for a roof. And so people are trying to solve this problem every single day in this state. At the end of the day, we can only control what, from an underwriting standpoint, what the value is right now. I don't believe it's going to get worse because if it gets worse, then no one's going to do any business with business, right? So they have to come up with some type of solution. So you underwrite it, but we do see it. You do see that in your escrow payment and your monthly payment, you see it go up, taxes and insurance. So that's why when we underwrite and you're value adding, you want to make sure like, okay, so I got a 12 cap today and next year you get a tax assessment bill or an insurance bill. And it's like, I was profiting $400 a month. Now it went down to 325 in 1 year, and that happens all the time. So some of the guys that are the pros know that from the beginning. Generally in real estate, it's all in the buy, right? It's how you buy it. And unless it's extremely distressed and there's unlimited capped value add, which is very hard to find now, you just have to buy them right.
And where do you see most of the business flowing in Southern Florida, where you're based in Sarasota?
Yeah.
Do you see Fort Lauderdale, West Palm? I mean, the whole belt. I mean, where do you see a lot of deals being done?
For us, the most things we're seeing here, they're still building here rapidly, right? So we do see population growth here year over year. And so a lot of people are leaving, you know, New York City, where it's extremely expensive to live in, California, or people have problems with government there. They're paying high taxes, but they don't feel like they're getting anything out of it. They come to Florida. They can save money because our state doesn't have state income tax. So, you have now the Wall Street South that's building in Miami. So I see it across the board everywhere. The home builders are doing well here for single family homes. And the biggest thing in my sector is we are a tourist state. So the people that service these tourism and hospitality businesses need places to live as well. So I think that market is good. I see it all over the coastline. People are pushing further into the state. So usually the density is around the coast. Now, like if you go down the interstate, everything there. And now what people are building is multiple master plan communities. In my own town, there was only one downtown, which I'm at now. Now every master plan builder has figured out this model to where let's build mass amount of restaurants and then let's build a downtown of commercial restaurants, office space, and retail in the middle of this development. And now that has become this new massive thing here to where it's working out for them pretty well. So we see a lot of that.
And so that's a lot of that is what you guys are actually facilitating and lending on.
We
And
are lending on to the buyers who want to come down and purchase them. So essentially it's called resort style living. So we'd have like realtors call us and say, "Hey, I want to move to this area." Whatever they'd call us. A lot of those builders provide in-house financing. So they generally get better deals in the market. We provide it for people who want to do on their bank statements or on their P&Ls, business owners who want to come down there, move their money down here. They'd call us and we'd secure the financing. But we're seeing a lot of people move into those type of communities for sure.
I see. So and the land is much cheaper, right? They're getting big discounts on the land to build, and their markups are
Yeah,
probably
yeah, because
huge as compared to the
they're just
cost.
pushing further into like no man's land and then turning into this incredible area. But the coastlines and all that stuff, I think the market here is getting close to stabilizing. It's been correcting and correcting and correcting. I think it corrects maybe another, we don't know, but I would say 10 more percent. And I think then that sits at a pretty fair value. As long as the job market stays good here, we have to do a good job with tourism down here and population growth continues, the market should be good. Right now, because the rates are so high, the inventory, one of 7 homes in the country is for sale in Florida. The prices are way too high, and there's so much inventory for sale. It's bad for the people who bought at a wrong time. Great for you coming in as a new homeowner. Great for you coming in as a new investor, because now you're going to see this influx of deals coming. And if you time that out where you can buy it right now, we tell a lot of our clients that are buying homes, whether it's they're buying it for their family or they're buying it as an investment. Right now is a time in a buyer's market where you can get a deal because there's so much inventory that prices are cutting. If you just go on Zillow, every listing says price cut 50,000, 25,000. So you can go in there and make an aggressive offer. And then people come back to us as from the banking side of it and say, well, the interest rates are too high. And I say, well, if you qualify, we can always refi, but I can't always shut off 100,000 of a list price because when the rates do come down, your prices are going to go back up because then more buyers are going to be entering the market. So more buyers are going to enter the market because the rates are better. So I say to a lot of these people, come talk to mortgage professionals, come talk to our team, see if you qualify, aggressively negotiate a deal, get into a home. When the rates get better, we'll refi you to a better rate. Now you got both sides of the coin. You got the good rate and you got it for the cheapest price because you bought it when the inventory was so outrageous. So that's kind of the strategy that we're in right now and that's on the investment side and the homeowner side.
I see. Okay. And do you do a lot of creative financing as well? So from a perspective of double closing, capital stacking, seller
We don't
financing?
do
No.
we don't do a lot of that, but we do work with the exit strategies for that. So, say somebody comes in and says, I have a seller financing, or we do put people in touch with hard money guys that we have, you know, any deal that anyone wants to run by us, or to me personally, that, is watching this or wherever it's shared, you could call any one of our team. We look at every single thing that comes to the door. We don't say no. That's kind of our job. And then we try to guide people in the right direction. Um, we are the more institutional person who wants to exit. We have a guy that comes in right now. We're doing one right now. He calls us and he needs to get a conventional loan. His hard money is ballooning at the end of the month. He owes $1.8 million on a multifamily. He needs to pay off this balloon or he's going to get hit with some more money. He owes 15% to the hard money guy. We're going through back and forth with the appraisal company. We're trying to get this thing done and knocked out for him so we can pay off the hard money guy, so he can borrow more money from the hard money guy. So we're kind of the final boss of the spectrum, right? We're not the guy when you have a good deal where you call and say, hey, I got this deal. I need money now type of guy. We're the guy who's like, I got the deal from this guy, added the value, did this, that. Now I need long-term secured financing. And that's kind of what we work on. We work on that. So we're familiar with every vertical, whether it's capital stacking or whether it's seller financing, or whether people are double closing it. We work with all different angles with whatever that investor is doing, but at some point, unless they're in and out of transactions, but if that transaction at any point is being held for a long period of time because they want to cash flow it and they want to add it to their portfolio, or they want to wait so it appreciates, you call guys like us because we can find the best product out there that suits that investment or that vehicle. Because to be honest with you, there are a lot of institutional products that do the same thing as hard money. The only difference is the documentation. Some people just don't like to provide documentation, but there are institutional products that are the same as hard money. It has a little bit more red tape, but the rates are better and it's, more secured. So there are, there are pros and cons to both sides.
So, so let me touch upon that. So,
Yeah,
for example, let's say there was I've gone through the process myself in a different way, and people that I know
sure.
is I'm not a US citizen or a
Okay.
resident, sorry, not a citizen, resident yet. What is and when I've spoken to lending companies, they're like, most of them are like, nope. Others are like, yes, we'll lend to you, but it's going to be at a different rate. We're going to need different things.
Yeah,
There's different criteria for each one of them. Then
sure.
you've got the hard money guys that will just throw money at absolutely everything at ridiculously high rates, right? And some of them unreasonable from that perspective. But
Yes.
what do you see if somebody wants to get into, let's say one route, whether it's development, whether it's value add, or whatever the silos are? What would you say is the best way to do that? Number one. Number two is, would you recommend them trying these institutional products directly or coming to a person like yourself? And three, what would the benefits be of doing that as opposed to going direct?
So if they were to go in, I would take a look at I would look at institutional products. The biggest advantage and disadvantage to me is this: in the financial products, institutional products, we need a licensed general contractor to create a draw schedule to provide, and the bank is now paying out that contractor based on a development, whether it's a development, new construction, fix and flip in that world. The other world in a hard money guy is a lot of these guys say, I need 50 grand to get the remodeled and I need 100 grand to buy the house. They get the 50 grand. So whether they want to take a husband and wife team and go paint it themselves and build it themselves, or get a bunch of guys who potentially might not be licensed to go do the electrical and the plumbing, they can save a ton of money in that by doing the work themselves. In our products, you physically can't. It has to get done through a general contractor. The good thing about that is it's done legally to when you sell it, we can say, well, hey, this flip has been done by a licensed contractor. Because generally, if you're flipping a single family home, the next person who's buying it might be coming in with a loan product like an FHA loan product, which is a first time homebuyer loan product. The first time homebuyer loan product has an appraisal, and those appraisals are sometimes tough, where they're like, well, this needs to be done, this needs to be done, this needs to be done. Because the bank is only giving you 3.5% down, they're taking all the risk on the loan. They want to make sure that all these things are crossed off. Now, when you go to a institutional route, it has to be crossed off because the general contractor has done it. So you have proof that it was legally done. In this world, you have been able to potentially have done it but cheaper because you use your own crew, your own people. You've not had to pay a fee to a contractor. So that's kind of really where it differs. Besides that, and I would say this side of the world, because of that red tape, but also here, the interest rates are from like 9 to 11. Over here, it could be 11 to 15 or 12 to 18, So that's kind of where both of the things go. Now, from that being said, from the exit strategy of it being a long-term hold, if you're not selling it, all of that is generally the same across the board. So
And
I think
do
those
you
are the
help?
pros and cons.
Do you help with the GCs as well? Like if people like GCs that you're comfortable with, that you guys work with and have known, do you help with the introduction side?
We don't because, like, if it was personally in my market, I can guide people in the right direction. But because we lend in all 50 states, we don't have that many contacts to help with that. But usually, the people that come to us have already done some baseline of homework, and and we will guide them, right? So when they come to us and say we have this project, we would say get multiple quotes, get 3 different quotes, for each thing. So we would tell them kind of right what to do. We won't physically, you know, get them somebody, but we'll tell them what to do as far as what they should be looking for and all that. Generally, the people that are in this world are someone who like worked with the fix and flip guy who have some baseline knowledge, and then they get into it, and then they get into it. There's a team of a group of guys who want to get into it. So it gets better over time, it gets faster, it gets easier. The first deal is always the hardest for anybody. And then you realize that anyone that's in real estate knows how addicting it is. It's like the most addicting thing to do ever. It's like you're playing the game of Monopoly in real life every single day. And it's so fun for the real estate. Anyone I know that's in real estate, all they'll do is talk about real estate. If you talk to my wife and my friends, they're like, can this guy shut up about real estate? But that's, you understand,
Yeah.
like there's so many different ways, there's so many different deals. But yeah, I would say anyone that presents us anything, we take a look at in any way we can help. And another thing is this: we might not be the best fit. Whether you're a homeowner coming to us for a single family home, or you're an investor that wants to buy a quadplex, you might send us and say, "Hey, man, I got this loan estimate from this bank. Can you take a look at it?" And I'd be like, "That's what that bank's giving you? That's a great deal. Go take it." You know, we're not going to sit there and we like to just be fully transparent. I think it's a good deal. I think you should take it. You know, and then we'll review it to say like make sure there's nothing hidden in the loan that is sneaky. But we would take a review and try to guide them in the right direction.
And last question, touching upon the mortgage and lending side of it, which we
Yeah.
skipped over previously. How did you get into that? You said that it was a friend of yours who was already in it.
Yes.
How long did it take you to get into that business? What made you cross the line to get into the business? Because
So
yeah,
yeah. So I was transitioning out of the restaurant. My family, my uncle and my cousin moved here from England, and they sold their business there. And then we were all at the restaurant and running the real estate portfolio. And then they got into real estate as well. It's just, they started buying their own units. So as a family, we're always buying units. And I had a young kid and I was sitting at home and I was like, what am I going to do now? Like I've done enough to where I don't, my bills can be paid and I can be at home and take a break for a little bit. But by any means, I'm not anywhere near to where like, this guy's sitting on a beach on a plane drinking a margarita, like I'm still very, very far from that. So I just got introduced and my partner Anthony flew here from New York. We went to lunch and he matches kind of the same energy as I do. And the way he explained it to me and actually the business side of it, it was and how many people were leaving the industry, right? So in the mortgage space, it's very cyclical and you go on these high runs. Same with real estate agents, right? So like real estate agents right now, there's probably like 200,000 real estate agents in just the state of Florida alone, something crazy number like that. And if they don't get a sale, they just quit. They try their best to generate leads and do this and they quit. Mortgage professionals in the same world. So he was coming up with this strategy of having business development managers, where essentially instead of the mortgage professional sits there that might be the most talented at structuring a loan, but might be terrible at going in the field meeting the real estate agents that give us the customers. So we've created this new model to where we can go up to brokerages around the country and provide them almost like a concierge for their business that everyone on their team can just be like, hey, I got a new client. I want to get them pre-approved. Call this guy. And then he sends it into our team of guys who are good at doing mortgages. Generally, one guy would be doing that entire pipeline, right? From originating the customer to then fielding the call to then doing the paperwork to then getting it to closing. We've kind of subdivided it into roles and subdivided the money between them so we can do more volume, but take care of more customers from like a more of a white glove service. And when that was explained to me, and he's like, "But now let's scale it," I just got super excited. One, it was challenging. Two, was an industry I knew nothing about, and I said to we came up with an agreement, and we said, "Hey, let's do this. We're going to do this. Let's do it together. Let's try to build it as fast as we can." But it with give the customer, and we know we've had setbacks. We've lost customers. We've learned a lot of things, going what works, what doesn't work, and we're getting better every day. But that's in any business. You know, luckily we have a great, American Financial Network is an incredible company. So they have such big power behind them that helps us, when we want to try new things and create different angles. So overall, it's just a good experience, and it's fun building something new because it's still in the real estate space. So you're still doing what I do every single day, but you're just looking at it from a different angle. And it opens your eyes because now you're seeing what the bank wants to see. The investor sees what they see, and I'm seeing what the bank wants to see. So I now know both ways. It's kind of what I compare it to is like it's like a prosecutor that works for the state putting bad guys in jail that becomes a criminal defense attorney. That's kind of essentially where I have moved my career to. So, but it's been great. And, anyone that ever needs help there, you can always message me and reach out to any one of our team members and any mortgage advice, even from a homeowner standpoint. If they just wanted to just do a single family home to anything in the investment world, we're happy to help. And yeah.
That's great. And I'll link your details down below the video as
Yeah.
well so people could find you and your socials and your company and everything like that. And I always like to finish off by, if you were to give your final 30-second speech to the world, what would it be?
Yeah. Uh, from a business standpoint
It could be
or any,
absolutely anything, something deep down
I
from
would
the heart.
say Yeah, I would say, you just gotta find your purpose. Life gets tough, it gets hard. You gotta keep chugging along, find a reason to get you up, whether it's like your kids or a hobby or trying to achieve a financial goal or something like that. You find that and then find like-minded people around you that also share some type of vision like that motivate you, and put them in a group chat, and every day make jokes and have that. And I think quickly you'll learn, like, it's less lonely when people are there. There are more people like going through tough times. I've lost money, I've made money. People have started businesses, they failed businesses. People, you got an F on an exam. The guy sitting next to you got an A. Whatever it is, you find people that are going through similar things that want to better themselves. And as a team and as a community, you guys work hard to achieve it. And from that, you'll end up finding happiness because life is easier to do it in numbers and stronger with your family, with your community, and with your friends. So, yeah, that's what I would say.
No, thank you very much for that. And what's one lesson that what's one motto or lesson that you live by every single day?
Um, I would say just get up and go. At the end of the day, like all of the tasks and all of the things that you need to accomplish in a day or in your lifetime, they're just going to be sitting there, and we don't have unlimited time, right? That is one commodity that being successful does not get you. That is the one thing that is actually going the opposite direction. So every day is another day closer to the end. So, if you have that internal clock in your head and start training your brain to say, "Hey, I'm running out of time here," and you have that sense of urgency, you'll just naturally learn to move quicker, and then in turn, learn how to slow down and enjoy the finish line.
That's brilliant,
So,
Anish. I really appreciate you. Thank you for coming on.
yes,
You've shared
absolutely.
a
Thanks for
wealth of
having
knowledge
me.
with us. You're very welcome. And we'll do it again sometime as well.
Absolutely. All right. Thank you very much.
Perfect.